Good NFP Friday, everybody. Hope everyone had a good holiday. Those in the US watching the fireworks. Keep in mind, a couple weeks ago, we were only minutes away from fireworks happening in the Middle East. So grateful that we had peace on this 4th of July. Also a little ground shaking here in Southern California yesterday. And I think that there's going to be a little shaking of the ground in the Treasury market. So I have a couple of ideas I'm looking to execute. I really don't try and guess the reaction of the NFP. To me, that's roulette. It's binary. I'd rather react to it. Everyone with me? I remember I was at FX Street and someone came up to me and said, Dale, I got long the euro. No, it was in Central, Eastern California, didn't even feel it. But they say it could be a precursor for something even bigger, a 20% chance. Anyway, I lost my train of thought. Oh yeah, so he said, Dale, you know, I got long the euro, and you know we had that weak number, and the euro rallied 120 pips. And I said, good guess. And that's all it is a guess, just like the guesstimates are a guess. So I'd rather react to it. A couple of ideas, a few things I'm looking for to do. I'm not sure if they're just going to go with the number, or for example, EG, you know, which has been grinding. It's in a megaphone formation here. I'd like to see the stops taken out. You see this high right here? High is 89.89.9, and the high here was 89.92. So I think there's a few buy stops over this high, and would like to see up here around 90. I'll be taking a shot up there. That's one. If you recall Steve's analysis on the dollar, this 97 level, 96.80 to 97, I thought we could get to 97. It's going to be important that if you're a dollar bear, even Greg had talked about it, closing back above, I think Greg had 97.40, changes the picture in the dollar, and that we're headed higher from here. So potential reversal here, may look to do something on the short side of the dollar. And the one most crowded trade is yields. And of course, like usual, I was a little early. I'm long TBT, which is an ETF that appreciates when bond yields go up. So we do have some divergence here on the 4-hour and the 10-year. I don't know if we could say we had it on the 4-hour glaring, and daily. Look at this. So the macro, we're still diverging. To me, it looks like 1, 2, 3. And I'm not looking for anything huge, at least right away. I mean, I was, but you know, all the analyticians are saying this is wave 4 and we'll go to 217, but maybe we're completing, maybe this was 4. I'm going to ask Steve about it. And I think there could be a little minor earthquake in bonds. DSI has been up near 90 or higher for weeks now. People have felt completely safe in bonds and been right with the appreciation. And, you know, if you don't trade bond futures, here's a couple of the ETFs. You look at TLT from Friday, we're diverging. This too could be a third drive, 1, 2, 3 here for at least a pullback to 130, maybe 126. And then if you don't want to trade options and buy puts on this, you could go with the opposite of TLT, which is TBT, which I'm underwater 24 points here, still diverging. We get the kind of pop I think we can. I don't know why we can't trade 34, 35 and TBT, at least back to these lows and fill the gap up around 32. So those are some of my ideas going into it. I did not buy the yen yet. I look at the yen and think that there could be one more dip, but it's acting okay. You know, we've had a little pullback, bounce. Now, if we pull back to 107, it's really going to be a glaring divergence here in the end. Maybe I missed it by not buying this, you know, but this didn't look like it had the form to go. So maybe we have something like this. See this from up here that would take it down one more time. But actually, if it goes from here, this actually builds the case for yields to start heading up again. And with this going up, if it is going to just go from here, then perhaps the metals have topped. I was thinking there might be one more shot up. We've had a double top here. We have a confirmed high, well, divergent high, but the momentum was pretty extreme at 82. I don't like divergences over 70 reading on the RSI. This is starting to look like a flag. So we'll see if it just rolls over under this moving average or we get another shot up. We get another shot up. I don't think it'll confirm. Silver's been dogging it all the way. But, you know, I have a hard time shorting silver because I thought this was an important level. And look at how many pokes. We even had a close under it. This would be a false breakdown, and it's sitting right here on support. So those are some of my ideas for potential reversals after the number. Let me stress after the number. If it happens, my ideas just begin to generate on the number, then I'll have to finesse entries. But if I get the action I'm looking for, those are a few things I'm looking to assume some risk on and take some positions home into the long weekend. And I think that's pretty much a wrap for me. Crude had a pretty bad week. It's trying to recover. But, you know, you have to say, pretty negative week. We were here early in the week on the OPEC announcement, and this was pretty directional, especially this part. I'd say this was impulsive. Maybe we get a bear market rally to sell into. And right now, the S&Ps are backing away from psychological resistance at 30.50. But I'm waiting for mid-month to do something in the S&Ps, and I think it's going to be 30 and a quarter, 30.50. A lot of people banding about those numbers, so we'll see what happens. I'm not going to short it there. I really think that the surprise is going to happen in the Treasury market. That's my guess, just a guess, and a position. How do you know if dollar strength is coming? How do you know? Okay. Well, one of the things that I look for dollar strength to come would be in EG heading south. Okay, that means the euro is underperforming the pound, and a lot of the times that happens with the dollar going up. How to interpret the chart, Mohammed? You could go to our website, and there really is a great educational section on it where you can learn about everything. Okay, see, go to our website, the link's in the room, and you click on the education section here. And then you could go to all different types of analysis, okay? And you have the blogs. So, and really the best way to learn is to be part of a community and surround yourself with traders better than you, more advanced than you, and you'll rise to their level. And we have one of the best communities on the net. So join ForexAnalytix. And if you just want to browse it, you can at least take a trial for $1 and see what's there. Because we do have the best team on the net. I'm not going to pull punches on that. Okay. Try and find a place where you have this many giving spirits and talented traders in one place. Let me know, and I'd be surprised if you could find something better. So here you go, Mohammed. and you sign up for the trial. And really, if you don't like it after 10 days, give me your address and I'll send you $1. Is that a deal? I'll send you a refund. Postage due, as my friend Ziggy always does. Okay, so we're about 20 minutes away from D-Day. And NFP to me means no effing problem. So looking for opportunities on this NFP. And we'll see if the market delivers them. And if not, the key word for traders is next. Okay, there's always another bus around the corner. So don't get FOMO. Write this down. I'll miss trades every day, and that's okay because there's always another. So don't feel pressured if you know, a market seems to be getting away from you. Just walk away and let things reset. And you'll have retracements, fibs, all kinds of different reasons. Sometimes it's okay to be late because one of the best traders I know is Steve Volge. And he doesn't catch the tops or the bottoms, but you know what? He has higher percentage hit rates because he waits for confirmation. If you wait for confirmation, you're not going to get the high or the low, but you're going to have more evidence and technical confirmation that your idea is manifesting by price action. So with that being said, I think Steve's here with us today. Are you, buddy?
Hey, Dale. Good morning.
Hey, how are you? How's Jason doing?
Much better.
Oh, good. How about you? You sleeping?
Yesterday managed to get some nice rest.
Okay.
How have you been?
Good, good. You know, just it's nice to have a day off, and I'm ready to go. You know, I'm ready to see if there's anything to execute after this number. What's the market looking for, Steve? About 130-ish?
If I remember right,
headline.
160. 160.
Yeah. Oh, okay. And what's the more important part of the report that we should be paying attention to? Wages?
Average hourly earnings is very important. Yes, also the revision in payrolls. It's often
last month we had a bad number. There's no question about it.
Yep.
So
that was what, 75,000 or something.
So definitely the market is also going to be focused to see if that number was an outlier that perhaps didn't even depict you know, reality. Because I remind you that the first print is always, you know, an estimate that can vary quite significantly on occasion from the actual number. So yes, definitely the market is going to be focused.
And it would give, if we had a weak number, it would give the Fed more cover to move in a few weeks, right? If we had a strong number, do you think it's going to be a little bit more, or comes in line and revisions up from last month? Do you think?
I think that a strong number will definitely put a little bit of a doubt in the mind of market participants, and there might reprice somewhat the absolute certainty. Last time I checked, a few days ago, the market was pricing in 100% of a 25 base point cut and a 20% chance, actually, 80% to be exact. It was pricing in 80% that we're going to have a 25 basis points cut and 20% that we're going to have a 50 base points cut. Yeah. So in essence, the 25 base points were 100% priced in, and there was even a chance that we would see 50 base points of a cut.
Wow, that, you know, that reminds me of a Prince song. If they're disappointed, "When Doves Cry" by Prince. Doves nice. Will be crying if that happens.
My personal opinion is that if market keeps pricing in as strongly the fact that we're going to have a cut, which I doubt it that it's going to turn around, there is no chance that the Fed is going to disappoint. On the other hand, no matter what the market ends up pricing in, I think that with stocks at all-time highs, there is also zero chance, no matter what the market is pricing in, for a 50 base point cut at the moment. Okay. So I think that, you know, the market pricing in 20% of a 50 base point cut at the moment is not realistic, not with what we have in hand. That's what I believe.
Okay, the second thing, and then I'm going to just turn it over to you guys. Steve, we're up at this level where you had a breakdown in the Dixie, I believe, and Dixie has to roll over here soon, or it'll negate that breakdown. Is that correct?
Yeah, and there's nobody that questions that today is going to be the day that, at least, it's extremely likely that today is going to be the day that we're going to have the DXY making a decision if it wants to move higher from here, and in essence, increase substantially the chances that the move lower was a corrective move that is over. I still doubt that quite a lot. I still think there is a very decent chance that even if this is a corrective move lower, there is still more to run to the downside. On the other hand, if we
charts, bro.
Yeah, on the other hand, if we get rejected today, I think we're headed lower. So let me grab the charts. There we go. Okay, there it is. So yes, one thing is for sure, and that is something that we frequently see, and that is that there are several of the popular and less popular currency pairs that are positioned, at key areas, at key levels ahead of the NFPs. Keep in mind also, let me not forget to say, today, as usually, it's not only US employment data that we have, but it's also Canadian employment data that we're expecting, right, Celio?
Yes, that is correct. We have employment data out of Canada, so probably want to be looking at USD CAD on the when the numbers are coming out.
Yeah, absolutely.
Yes. Also, a couple of other things maybe worth mentioning just before we continue. We had another pretty shocking number out of Germany. We had factory orders were expected at roughly flat, and they came in at minus 2.2% month on month. So that was a pretty big miss. And the other, and that continues a string of bad numbers out of Germany. Granted, we had a couple which were better than expected, but really, 9 out of 10 or 8 out of 10 are not good at the moment. And the other interesting thing, again, concerns Germany. And I was reading about Deutsche Bank. I have a few friends. I know you have a good friend there who used to work there, Steve. And they're laying off really quite dramatically. I think the plan is for another 20,000 layoffs, and not just in the rates and equity departments, or pretty much everywhere. So that is.
Speaking of which, the Deutsche Bank is testing previous support as resistance as we speak.
Yeah.
As you see, this chart is simply abysmal.
Yeah, this bounce, I'm not convinced about it.
Yeah.
So so it's not, Germany's biggest bank in some trouble, and they're going to try to do the best to restructure, but you know how these things work. It takes time. And
the thing is that we've seen that before with other companies. They keep coming up with a new CEO and a new plan every year, in essence, more or less. And despite all that, we haven't seen any real turnaround in the business, right?
Yeah, and you can try and turn around the business like that, and you might succeed. But the problem is, if you are doing that just as the global economy is turning, and imagine if we have a recession. I mean, that's going to be double whammy for Deutsche and for most banks, actually. So I remember this very well. I remember 2008. I was working at Merrill Lynch at the time. Man, it was scary times. I can tell you that.
Deutsche Bank, that's the fun part, and that's another sign of the huge inefficiencies that have been created in the system through all this monetary policy madness. Is one of the few banks that actually didn't decide to take any help, right, to recover from the financial crisis, and as it seems, it's paying the piper, right?
Yeah. Actually, to be fair though, they were in a better state than many of the other banks that did take, TARP and all this government help.
Yeah, but there's been a huge divergence in how they're performing since.
I agree. And the derivatives books are massive.
Yeah,
Absolutely massive.
Absolutely. Anything else, Stelio, that we've had before we?
Not really. I mean, it's been a very quiet couple of days due to the US holiday, so nothing.
Yeah, yesterday was dead.
Yeah. Actually, we did have one more number of note. We had household spending out of Japan, which is it's a good indicator, and it was absolutely incredible. I mean, we're expecting 1% month on month or 1.5% year on year, and came in at 5.5% month on month and 4% year on year. So that was a pretty big jump. I'm going to try and find out if there was any particular reason for that. But Japan, it's had a couple of decades of basically nothing, and now it's slowly starting to, well, I don't want to say recover, but it's faring better than some other economies. Let's put it.
Yeah, as usually though, USD, yen, and yen in particular are the yen is never responding to economic data for some reason.
It responds to the S&P, right?
Yeah, it just functions as a proxy for risk, and yields. Of course, somebody would say responding to yields is healthy because you expect yields to respond to economic data. Unfortunately, that isn't happening either. So, yeah.
Actually, we have a question from Eric, and he says, 162K is what the calendar says for the expectation NFP, and is that what the market thinks? The answer to that is, you have investing.com, you have Bloomberg, you have all these other platforms. It's a poll of economists, of certain people. So the sample is not going to be the same for everyone, but it's going to be overall.
But it's usually close. Yeah, yes. but it's usually close.
So indeed. It just gives you an idea of what some people are thinking. It's not the whole market. Let's put it.
Personally, having seen the ADPs we had last time, etc. If I had to choose, which I'm not in a guessing game in any way, but if I had to choose, I would take the under in the expectations.
ADP. We saw ADP as well.
Yeah. I'm not trading of it, obviously, but if I had to choose, I would take the under. I would expect a weaker number than what the market is currently pricing in. That's my personal intuition.
I'll be looking close at the revision because it was a low print, and any lower revision will take it closer to zero. You know how psychology works. So
yeah,
this
absolutely.
is going to be a big one. I'll tell you the one up.
Although with being at the juncture that we are, having to do with monetary policy expectations, you know how it is. It is extremely likely, Stelio, that a weak number is going to solidify markets' expectations for monetary easing to begin again, ASAP, at the end of July. So I wouldn't be surprised at all if a bad number produces a positive reaction with risk assets.
Of course.
Yeah. Don't forget that we spent a decent period of time that we had moved away from that. I mean, we did go through a period of time after a long time of monetary easing that actually good news were producing risk on moves and bad news were producing risk of moves. But, I think we're once again in the mode that we should see a risk on probably if we see a bad number, unless it's like a horrific number or so, in which case perhaps market jitters about upcoming recession will be a lot stronger than solidifying expectations for monetary easing to begin in a few days from now. What is it? 31st of July? Is it that we have the Fed?
I think so. Let me check. Hold on.
Yeah, I think so.
Yes, somewhere. Is it 31st? I need to check.
Hey guys, I just wanted to point out that we also have Canadian IVPMI today, also a little bit later on.
That is true. That is true.
At 10 a.m. Eastern.
That is true. I don't know what you're looking for in the USD CAD specifically as a pair, but I do see the case for a move lower or higher, and I think there is a very tight risk-reward ratio here on the 4-hour chart. I do see a descending wedge here, Paulie. As we trade at previous lows, So I wouldn't be surprised from a technical perspective if we actually punch through here, if we see US dollar strength. But on the other hand, just by having a look at the daily chart, you have to keep in mind that a risk reward favors very nicely long positions, because as you see, we're getting very, very close to a triple confluence of supports at 130. We have this long-term ascending channel that passes from there. We have this horizontal support resistance area, and keep in mind also that 130 is like a round number, so it's also psychological.
Exactly.
Yeah. But if we do break below there, I think that things become very, very, very tough for long positions, because I think there is probably going to be below 130. We're going to see longs just bailing out at any price. I consider it very, very likely. So I would be very careful here. As I said, risk reward, I think, favors longs, but below 130, I would simply not stay with that, right? I don't know. Do you are you watching something different, Polly?
Well, this was an area that we have as a bias chart support, was this 30.43. We're looking for that earlier in the week. Remember, we bounced up and then we faded, and we're there, and there's a lot of support underneath there. But
yeah, the 38.2 is also here. I forgot to mention.
But I was going to mention that in the euro, I think it's all about the close, because this is a huge, huge, huge support level at 12.62 in the euro. So as long as they can hold above it, and actually to a certain extent, I think the euro's done okay considering with the Bunds making these all-time lows, and the idea is that the ECB will continue to will take another step. The thought they were saying this morning was, because it's holding up better, is because they expect that obviously if the Fed does cut, they have a whole lot more room to work with, and I think that's the key reason why the dollar hasn't even taken off further. But I think we're at a key juncture, not only for the euro but also for the cash dollar index.
Yeah, absolutely. Euro, you mentioned it. I know that you're looking shorter term charts usually, but even on the daily, we can.
12.62 is huge on the daily close. If you look, that's a huge level coming right across.
We can see that it's also this ascending. I mean, so far this rebound higher is channeled. So we're currently testing channel support. So from the Euro USD perspective, finding support here. So if we get dollar weakness coming through as a result of what we see from the NFPs, I do think that Euro USD, as you very well said, is very well positioned for a rebound from here. Unquestionably. And as I said, the opposite stands for USD CAD. So USD CAD looks well positioned for a rebound if we see US dollar strength. So what I'm trying to say here is that nobody can make a prediction about what the NFPs is going to bring, but definitely you can make a valid choice of, from a technical perspective, what looks like well positioned to benefit from one case or the other. Now, on the other hand, I couldn't help myself but shorting the S&P, although I've said multiple times that it remains very well bid, but I did find it like a good risk reward opportunity. I shorted it earlier today. Thinking that the risk reward is amazing, because in essence I just risk here like 9 handles from my entry point, and I do think there is a chance that we're going to see a pullback from here. You can even interpret this as an ascending wedge with a little overthrow. So if we do see a breakdown from 29.75, 76, in my opinion, there's going to be a deeper corrective move lower. I don't know what's your view on stocks at the moment. As I said, it's not that I have anything to use as a strong.
It's a good shot, Steve. Everyone's looking for 30-25, 30-50, and I've learned when everyone's looking for one number, it either never gets there or blows right through it.
No, I admit, Coach, this was purely a trade coming.
Numbers in 2 seconds, guys.
Yeah. Let me
interrupt, but
there we go.
224.
Oh yeah, much stronger. So okay.
Average hourly earnings slightly worse than expected.
Unemployment climbed higher to 3.7.
This is a key level here with the euro at 12.47 right here. If you're looking at intraday, that's our bias chart support for today.
Is it due to participation?
Yes, it is. 0.1 higher participation. So
okay, so the participation and employment data from Canada, actually much worse than expected. We were expecting 10K positive. We got minus 2.2 negative. That didn't change though. The unemployment rate, it stayed at 5.5%. Work week hours stayed the same. Participation rate for Canada stayed the same. Manufacturing, okay, no, that was earlier.
How does the Fed ease in the face of this number?
And at all-time highs. That's a good question. By the way, I have to say that I like my S&P short because, as I was explaining earlier, I do think that the market temporarily might be in good news is bad news for risk, bad news is good news. So I think that this strong number, as you very well said, Coach, I doubt it that it's going to stop the Fed from cutting 25 base points, but is it going to tilt a little bit market's expectations? Yes, because in my opinion, that number on its own might be enough to completely eliminate the chances of expecting, even a small percentage of a chance that, we're going to get cut by 50. So yeah, that I like this. I think that we might see the S&P moving lower after this number. We're going to find out soon enough, though. Now, EUR/USD so far is holding, as you see here, is on the 4-hour chart. So far, the EUR/USD is holding this ascending channel support, barely holding horizontal support area as well. Let's see if it's going to manage to do so in the upcoming minutes. Here is the USD yen also rebounding within an ascending channel. So far, I see nothing impulsive with this move. I would need to see an acceleration and a penetration through this ascending channel for me to start thinking that we've probably found the bottom. And here is the USD CAD. I would pay attention to this because if you remember, I showed this descending wedge on the 4-hour chart. We're currently testing resistance. I do think that if we break above that area, we might see a stronger rebound. So I do think that USD CAD is a nice opportunity from a risk-reward perspective. For a move higher. I mean, risking like 40, 50 pips to, at least see a retracement towards 130, 180, 132 is probably. By the way, the dollar index is now slightly pulling back, but
yeah, our bias chart resistance is 97.11 for today.
Oh yeah. I put that there, and you can see it here, Paulie. Why? I mean, we've been trading within this channel, and we're now at the 50% fib from the high to the lows. Also, the 200 moving average here on the 4-hour chart is passing from that point. So key resistance for the DXY here. Let's see how the market responds. I think we need to give it a couple more minutes. By the way, the S&P is now turning lower and pushing. We are at lows of the day. As I said, probably it's, you can never predict in advance, but my intuition tells me that this is going to prove to be risk off as a number for the reasons I explained before. Let's see how the Aussie and the Kiwi are responding to this number. As you see,
I shorted Dixie 06 with a 40 pip stop.
Okay, that sounds good. Kiwi.
I picked up the euro at 12.47 because I think that we should have been a whole lot lower with that 224 print, but I think they're focusing on the wages.
On the wages, which were weaker than expected. Yeah, might be the case.
I feel better that I'm on the same side as Paulie.
Oh, absolutely. Paulie knows what he's doing.
I don't want to be on the other side of a bulldog.
That's very right.
You know what I mean, Paulie?
Absolutely.
Maybe you don't like that nickname. I don't know.
That's okay. I'm just going with, I think the market could have been a whole lot stronger. I think the euro could have been a whole lot weaker in light of that print of 220.
I agree. I agree. Keep in mind, point. Cable is also entering. You can see it here on the 4-hour chart. Also entering a key support area here between 125 and 125.50. That might prove a tough area to crack. So, you like cable to the upside. This is the area you want to be long. Although personally, I've expressed my opinion multiple times on this webinar. If you want to be short the dollar, I still see no evidence why pound should be the currency of preference. By the way, I mentioned it before, it was one of my favorite ideas if we saw any dollar strength coming through. And as you see on the 4-hour chart, now we have the USD Canada having posting as we speak an outside white candle on the 4-hour chart and breaking above this descending wedge. So I think it might be underway. I think
they did get to gold pretty good.
Yeah, they did. They sure did.
Let's have a look at what's happening with the metals here. Yep, the gold is dumping lower. There's no question about it. Gold will be in danger of having posted a double top.
Yeah.
But not yet. Don't jump the gun, because don't forget a double top.
It has to be under 1380 for the double top to be
confirmed. At the very least. I mean, the most lax interpretation would be exactly what you said, Coach. A move below this area here.
Okay.
Here. So anything above that is definitely or cannot be interpreted in any way as a double top. Now, of course, people might be jumping the gun, and sometimes you get lucky, of course. But it's not a double top just because we found resistance in the same area. We at least need to break below the previous low for us to view it in like this. Even in that case, I would be very, very careful, because don't forget that if we go back, by the way, look at the USD CAD on the daily chart. It's working on a morning star formation here. Okay. So I would be very, very careful. I told you that this, Paulie told you as well that we are on strong support. Even if we pushed a little bit lower, 130 was, a key support area. 4-hour chart was showing a descending wedge as well. I like USD CAD to the upside. I have to tell you. I mean, if I had to pick one pair to be long dollars, that would be it. And here is the DXY. Be careful here.
Yeah,
this,
new highs.
It's not about new highs, Coach. Look at this. We are now approaching. We're getting very close to this descending trend line resistance. I think this is going to be a very important trend line. Yeah. A rejection from here, keeps the index, in a short-term downtrend, while a break above it, makes this whole move lower look like a completed correction. So I would be very, very, very careful here. I mean, I did favor continuation lower for the dollar, but that doesn't mean that I'm going to go against what the charts are telling me. And the charts are telling me at the moment that dollar wants to be stronger. And as I said, if we penetrate through this area in the DXY, then it's a totally different game. By the way, S&P at the lows of the day. Give me a second. I picked up 1/3 of a position long in USD CAD. By the way, I want to have some long exposure in the dollar as we speak. So we got quite a lot of trading happening in this webinar today. Watch the cable as well, headed closer to the 125 support area. So really, I don't see, following this data, why the dollar shouldn't be somewhat stronger. The market is definitely going to reprice a little bit. As I said, at the very least, it's going to reprice the possibility of a 50 base points cut down to zero. But as I said before, I don't think that we're not going to cut 25 base points. A lot more should happen for the Fed to even consider not cutting at the end of the month. Of course, we still have several days, so who knows, what happens between here and then. But, as far as I'm concerned, keep also in mind, we have been warning about these areas. Aussie USD, and that should be very, very worrying for the bulls, once again getting rejected from the same confluence of resistances on a daily closing basis. We never managed to break above it here at 70.30. And this is something that you should pay close attention to. And exactly the same deal with the Kiwi, having to do with the equivalent confluence of resistances, which comes at 67.10. Those of you that are listening into the webinar, you know that I've been paying very, very close attention to both these areas as the areas that would confirm an extension higher for the Aussie and the Kiwi. We knocked on the door already a couple of times. Nobody seems to be answering yet. So, that is something you should pay close attention to. On the other hand, and I know that it's completely irrelevant to the NFPs, if you remember several days ago, I said, when we had that day there, watch carefully. I think that Aussie Kiwi might be bottoming and might be ready for another leg higher. And, we're now approaching this descending channel of resistance, which is going to confirm that, another leg higher is beginning for the Aussie Kiwi. I know that it's not affected by what happened to the NFPs and what's going to happen to the dollar, but in my opinion, it remains one very decently looking trade with, a great risk-reward ratio. Paul, is there anything else you're currently monitoring?
No, just as you mentioned, the CAD and as well as the euro and the cash dollar index. Not really anything other than that. We've already had a huge fall in the euro Aussie that had really come off, and we're just above some key support here with the if you for those that are looking at the cross rates, but we've got here, I think it's 60.32 is going to be our buy chart support, and we're holding steady there. But right now, to me today, it's all about the dollar index, the euro, obviously gold. That 1390, if you're looking on the gold spot, has been key before, and I got long this weekend, and that actually made my month when I was able to get a few days, just a couple of days ago. I took off a third at about a $15 gain, and actually got caught $40, and boy, that really just made my month right there. So other than that, I don't see anything else that I'm paying attention to.
Okay, cool. By the way, keep in mind, for those of you that are monitoring, USD NOK obviously benefiting as well from this rebound in the dollar, but keep in mind 860 is a very, very, very key resistance area. Okay, so be careful ahead of that. And another one I was monitoring earlier on, actually not on this one, on the 4-hour. Here it is. USD SEK, I was also monitoring. It was on a resistance. It's breaking higher. So there is a chance that we've found the tradable low in several pairs having to do with US dollar pairs, but it remains to be seen. We're going to know within the next few hours. Here is USD yen also rebounding. I would be paying close attention to this ascending channel as resistance. We are approaching it. Oops, sorry, this is the DXY, but as you'll see, the USD yen is quite similar. So this
look at yields, Steve.
Let's see.
So my call was there was going to be some shaking in the bond market, and I think we're going to have that today. Very big move in yields, 5 bips on the 10-year. Pretty big move.
I mean, we were looking for a reaction at some point. I mean, the market could not go.
Well, here it is.
Yeah, here it is. So far, quite a nice candle in the yields. I would, for me to confirm that we've started like a corrective move from there, I would like to see a break above this little trend line, and then we can be looking for higher targets. Okay, by higher targets, if we're talking about the yields, as I was saying the other day, I think a move, closer to 230. There is, resistance there. We had already started seeing the signs. I mean, this was a clear divergence that we were seeing on the RSI.
Yeah.
RSI.
3 drive, bro.
Yeah. I'm 100% with you. And something, if we want to completely erase those short-term viewpoints,
okay,
there you go.
There's your wedge. So we could get to 220-ish.
Yeah.
If it went to the top of the wedge.
If it went to the top of the wedge, it would be like 218 roughly. Mm-hmm. But we have this horizontal support resistance area that comes almost at 230. So yeah, absolutely. I mean, a rebound from here might be starting. We know that the market was, positioned extremely one-sided, and we know that eventually, when that's the case, the boat tilts over, right? We've seen.
Yeah, I mean, I don't think it's a 6.4 magnitude quake, but I'd call it a 4.2 maybe in the bond market here.
Yeah, absolutely.
Just enough to make people feel that, you know,
another
there is
divergence.
the earth is moving under their feet.
Another divergence here, and keep in mind, I remind you that we pinpointed that here, is look at copper. I mean, the S&P was pushing, you know, new all-time highs again and again and again. And look at copper. Copper found resistance exactly where we were looking for resistance at this nice confluence, and it's currently testing the support of this. You can even, you know, look at it as a bear flag. So I would be very, very, very careful here. By the way, let's see what the S&P is doing. S&P is moving quite nicely. I'm actually going to trail my stop loss to break even, which is at 29.92, if I remember right. Give me a second. Yep. Okay. Now it's at break even. Okay. S&P is working. This is a daily chart. S&P is
nice
working.
Trade, Steve.
Thank you. By the way, for those that were in the chat room, I gave it in the chat room. Just one handle away from my entry.
I'd also like to know where Paulie would turn constructive on US dollar yen, if you're still around, Paulie.
Yeah, that's a good question, Paulie. Personally, above 109, coach.
Okay. Yeah, you've been saying 109 for a while.
Yeah, 109 is important.
I think it's pretty constructive that it's battled its way back from Sunday night's high. You know, where it left a gap and sold off hard, and here we are knocking at the door.
One thing that really prevented me from being very bearish the USD yen is the fact that we had been trading below this multi-year symmetrical triangle for several days.
Yeah.
But the market never accelerated lower, and you've said it very well multiple times. The market very rarely gives you so much time to think and consider trading a breakout, because usually when a market breaks out, and it means it, I mean, and you know, it considers that an important event, you actually have an acceleration of price action and not a slowdown, right?
Right.
So this was definitely something that was troubling.
So we could end up with a false breakdown. And then,
absolutely.
And now, you know, in these big formations also, Steve, I teach that, you know, when you have such a major formation, sometimes the first breakout is a fake out. So now I'd look for a breakout to the upside. Once we're back inside, that's the next possibility. I know I'm getting ahead of myself.
Let's first close above 109 on a daily. And the market participants will have a lot to ponder during the weekend, because don't forget, usually price action on Friday also has an extra element to it, which is it gives...
who wants to go home with anything?
That's one thing. And second of all, it gives you time to think over the weekend,
right,
with what has happened, how you want to be positioned starting on Monday, right?
Do we have normal hours today? I know we closed early on Wednesday.
I think so.
Okay.
I think so, yeah. Stelio?
And Paulie is gone too. Just you and me, bro.
Sorry, I just stepped away for a second. What was the question?
What were you doing? Getting ready for ballet?
Not quite. Sorry, what was the question?
We have normal trading hours today, right?
As far as I know, yes.
Yeah.
Okay,
yes,
good. Okay, do a pirouette and go back to what you were doing.
And by the way, the Fed meeting is on the 31st, Steve, so you were right.
Okay,
well,
cool.
Oh, the Fed is the 21st?
31st.
31st.
31st of this month, the Fed?
Yes, last day of the month, yes.
Oh,
yes.
Wow, okay.
By the way, we have a question about crude, so let's revisit crude. Here it is. You know, I have no reason to be positive crude here. You can see why. I mean, we got a rebound. We found resistance at previous area of support. So in all honesty, I have no reason to be constructive crude, you know, at least in the short term. I see it very, very likely that we're going to come down to retest this 55, 40, 50% fib, perhaps even lower, 54, 60s previous resistance, previous rectangles resistance. So I have to say that as long as we remain below 57.40, I think, the downside is the path of least resistance, at least in the short term. Okay.
Dixie coming off a little bit.
It's coming off a little bit, but the question is
Got to get back under 90, which is where the spike took place. Back under 96.90, this would make it just like a buy the rumor, sell the fact.
Yeah, if you want to be short the Dixie, I can tell you one thing for sure. This is the place you want to do it if you want to be short. And the reason is, we showed this before, we're currently testing this descending trend line resistance, which defines this, move lower so far. Yeah. So, and the 50 DMA, we even touched it today there at 97.25, 97.27. So, you want to be short here. You have a very tight risk reward ratio. But if we break and close above there, I wouldn't be, I wouldn't be trading that side of the market. I can tell you that much. Okay. And as I said, look how many pairs got rejected today from important levels. The Aussie,
really great coverage today.
The Kiwi, USD CAD. Thank you, Coach. And by the way, speaking of the Dixie,
I was talking about everyone.
Me too.
Okay.
I'm part of everyone, right?
No, you're unique, bro.
Speaking of the Dixie, this is another thing to pay attention to. Look at this. This is the weekly chart.
Yeah.
And if we close on the highs today, which is extremely likely, this is a textbook morning star formation, the DXY, right? You can see it here. So the weekly candlestick formation is also threatening with quite a bullish signal, right? We're not there yet. We have a few hours left, to end the day, but so far it's looking quite constructive.
Oh, I wish I was in the land of Dixie. Remember that one? It really went. I wish I was in the land of cotton.
Nick says normal hours, but 50% of senior US traders are at the beach or Rhode Island today.
Only the shortstops are in, huh?
Let's see what else. Look at gold. Yeah, we had a look at that. Euro pound. I can tell you one thing for sure. Euro pound is one of the best risk reward opportunities out there at the moment. Possibly an ascending wedge right at long-term, multi-year descending channel resistance, clear loss of momentum, clear RSI divergence in the daily chart. So I can tell you one thing for sure. Being short Euro pound here is an easy decision. That doesn't mean that it's going to work. There's no guarantee in anything. But it's a very easy decision because several technical reasons say that we might start moving lower from here, and you can, take this trade by risking very little, and at the very least expect a move towards 88.50 once again, right? So you can have a target roughly of 120 pips to the downside by risking to the upside 50 pips. I mean, that's...
I'm waiting for just one more push, Steve. I'd like to see him take out the stops over 92 first. Maybe it's next week.
You mean 90-20, right? Because 92 is a lot higher.
Well, I mean 89.92.
Okay, got it. Yeah.
There's like a little double top there. There's some hope that was it. It could have been, but
But regardless, I stand by what I said. I think it's an easy short.
Yeah, I agree with you.
I mean, you risk very little. You have an okay chance of making 2 to 3 times of what you risk.
Let me mentor myself. I had many opportunities to sell it at 80 and, the other day at 92. And, I'm waiting for one more jiggle. And I should already have had my toe in the water. And, guys, don't try and be perfect all the time, or you're going to miss a lot of trades, have a toe in the water. And then if your perfect setup is there, you could always go with it. But, you know, I'm mentoring myself. Dale, why don't you have a toe in the water in Euro Pound? Why are you waiting for one more pop that may or may not happen if you're bearish? Capiche? Okay, Dale. Okay, coach. I hear you. I'm going to my mouth now. All right, buddy. There, I mentored myself.
Coach, by the way, S&P at the lows of the day.
Take half.
No.
I know you're looking for 40 handles.
No way. I mean, we're currently about to test this ascending wedges support. If we break below there, I think it's looking very, very nicely. And no way, you know, something. Why? I mean, best case scenario, I don't make anything. Worst case scenario, sorry, I don't make anything.
Okay, yeah, so you have BE stops on your trade now?
Yeah.
Mentally. Mental or physical?
No. I moved them while we were in the webinar. I said so.
Okay.
So yeah, whatever. Let it be, right?
Yeah. It's so nice to be in a riskless position.
Yeah, absolutely. There is potential. It's a free option after that.
Right.
In essence, I love free options.
Good money management.
Yeah, money management is like 70% of what we do, literally.
Yeah.
Literally. I think that if you teach a chimpanzee how to manage risk properly and let them randomly, you know, select sides of the market, they would still do more or less okay. And that proves how important the risk management is. Okay, Coach, do we have an interview today?
No.
Okay, we don't have an interview.
We have a full lineup next week.
Perfect.
And
looking forward to it.
Yeah, so everyone have a great weekend.
Everybody have a great weekend, and you know where you can get coverage for the rest of the day. That is ForexAnalytix. Will be on the chat room.
Who enjoyed our coverage here today? We had Paulie here. We had some live ideas. Was it just Madeline enjoyed it? Okay, so spread the word for NFP. There's no other place to be. Face. Okay. Thank you, buddy. So anything else you want to say, Steve?
Enjoy the weekend. Be careful the rest of the day. I think it's going to be quite important to see how we close the day and the week, and how the market reprices, chances of a cut. Although, as I said, I don't expect that when we're going to go below 100% for the 25 basis points. But still, we can.
Well, if the S&Ps are 100, 200 handles lower by the end of the month,
yeah, that's
today's
true.
employment report won't mean anything.
That is true.
As Peter Bookvar said, the Fed is S&P sensitive, not data sensitive.
Absolutely.
So
I mean, whoever doesn't see that is obviously blind to what's happening.
Okay, so why don't you wrap it with the tagline, Steve?
Don't just count your pips, count your blessings, and see you back on Monday.
Okay, everyone have a great weekend. Steve, you want to just end it?
Absolutely, Coach.
And okay, yes. Everyone have a great weekend. See you on Monday. Blake will be back.
Thank you, Coach. Thanks, Steve.
Oh, thank you, Stel. The best team on the net, in my extremely accurate and humble opinion. It's with the greatest pride I'd like to announce how humble I've become. All right, guys.
Have a nice weekend. Bye-bye.
Take care.
All right, see you guys. Adios.